Hello, everyone. Thank you so much for joining me. My name is Roz with Done Right Bookkeeping Services, and you're viewing this on either our Facebook page or our YouTube channel. So either one of those platforms that you're viewing us on, make sure you like, comment, and make sure you're following us on the Dave and Roz Bennerman Facebook page, and you are subscribing to the Done Right Bookkeeping Services YouTube channel, where we share different tips and strategies for bookkeeping. So for those small business owners who are looking for some tips and strategies, or you may be looking for a bookkeeper, right? I'm here for you. And I'm actually going to leave for you basically a link in the description area where you can actually schedule a free consultation. But before we get into all of that, this video is specifically going to talk about cash basis accounting versus accrual accounting and which one is right for you, right? Because it all comes down to your business structure. You know, do you have inventory? Do you have payroll? Just different aspects of the business that you may have that may require one or the other. So let's go ahead and get into this. I'm going to actually share my screen with you. So I created a presentation. So you should be able to see this. And this is basically, like I said, cash basis accounting versus accrual accounting. What you need to know. So I always have to put my disclaimer out here. We are not financial advisors or tax experts. This presentation is not designed to give financial advice. This presentation is for educational purposes only. So I just created this nice little flow chart because I love to see things simple, right? And especially when you're talking about bookkeeping, accounting, and things like that, I want to see it simple. Nice and clean and simple. So what is cash basis accounting? So basically, these 4 pillars, I'm going to call them pillars, that you need to know. And these are the things or the pillars that you're going to fit your different transactions into, either one of these different pillars for cash basis accounting. So your transactions, just understand that record all transactions in books when cash changes hands. So for example, if you're, let's say, a barber, all right, a barber, and it's just simple, you're not looking at your cost of goods, your hair products and all of that. Let's just do the simplest thing with a barber, right? A barber business. You're basically cutting someone's hair and you're getting cash or you're getting payment for it. That's it. As soon as the service is rendered, you're receiving payment. Okay? That's cash basis accounting. That's all there is. There's not, accounts payable, accounts receivable, none of those things. It's just simple, clean, cut, that's it. But there's some caveats to that as well, and we're going to get into that. So, incoming. Basically, payments received from your customers, like the example that I just shared. Outgoing, those are purchases, right, made by a company. Let's say you make a purchase, you buy some cutters, right? You just buy the cutters and that's it. It just cash, transaction is cash changes hands. That's it. No accounts receivable, accounts payable, none of that. It's just incoming, outgoing, the transactions are recorded. And then there's receipt payments. So just understand how you're receiving your payment, right? Or your payments, or how you're paying for the different products that you need based on cash, check, credit card, etc., to pay for the item. Simple, clean cut. That's cash basis accounting, right? Cash basis accounting is best for tracking cash flow, but no way to provide credit to a customer. Let's say a customer you want to refund a customer or something like that, or you want to credit them, there's no way to do that with cash basis accounting. Track customer payments. Unless you're keeping a separate spreadsheet for yourself, there's no way to track the customer payments. You're getting the cash in, whether it be from a check or a credit card or simply cash or some other way of payment, and you're receiving those payments in. And if you're buying items, you're just paying right out. Okay. Now we're going to get into accrual accounting, because this is where you can keep track of all the transactions. You're going to categorize those specifically to different accounts and things like of that nature. So transactions, you're going to record all transactions in books when they occur. Okay, when they occur. So regardless if you have something, let's say you purchase things or your customers purchase things on store credit. You're still, even though you may not receive the payment or the cash or the check or the credit card payment at that time, you're still going to record that transaction, but it's going to be a specific way that you actually have to record it. All right. It's not cash in hand. You're not receiving that, but that's revenue that's coming in. So even if no cash changes hands, you have to record that transaction. And then there's incoming. So record transactions immediately into accounts receivable. So just like the example I just shared, you're going to record that income that customer actually purchased on credit. You're going to record that immediately as accounts receivable. So that's part of your revenue. And then there's outgoing. You're going to record the transaction immediately. So if you're actually purchasing something, maybe you're purchasing wholesale and you have like store credit, you have store credit as a business owner. That's going to be recorded as accounts payable. So that's an expense, but it's going to be considered accounts payable in the accounts payable section, right? And then there's receipts and payments. Income, that's going to be on the income statement. The income statement is going to look great. Even if no cash is in the bank, guys, even if no cash is in the bank, the income statement is going to be great because the revenue is there, right? The revenue is accounted for, although cash may not have, and when I say cash, I'm talking about credit card, whatever type of payment for that product or service. Did you actually receive in the actual payment for that product or service at the time, right? But it's going to appear on your income statement as you did, although it's considered revenue. So record revenue when transaction occurs. Okay, so that's going to be considered your revenue. All right. So accrual accounting is best for matching revenue and expenses. But if a customer is slow to pay, it equals a lot of revenue, but little cash in your account. So you don't have the actual cash that you're going to be able to use to make other purchases as a business owner. Not good at tracking cash on hand. So you're not going to actually know how much cash you have available to make other purchases and things of that nature. Okay, because you're going to see the actual revenue. So just understand, and I love this quote by Peter Drucker, you can't manage what you can't measure. So, you want to make sure that you're keeping accurate records, because you don't want to have to go out as a small business owner and, you want to purchase, maybe you have trucks or, you're a trucking business or something like that, and you need to purchase another truck. But on your income statement, you have a lot of revenue, but your cash is not available. And maybe you want to put some cash down. You want to put a large payment down on that. And maybe part of that also The other part is going to be a loan, but you do want to put some cash down. In that scenario, with accrual accounting, you have to really see, look further into your accounts to make sure you actually have that cash on hand. So let's say that you're ready and you need a bookkeeper, right? That's what I do. So I basically help you automate your financial task and increase your profits. You might be saying, well, Roz, if I'm paying you as a bookkeeper, how is that helping me increase profits? Because that area of your business, you don't have to focus on. So that takes you away from that area of your business to focus on other areas to increase income that's coming in to your business. So you don't have to be overwhelmed or, so focused on the bookkeeping side. You can focus more on the sales and increasing the sales and the awareness of your business. All right. But that's what I have for you guys. I hope you found value in this video. If you're looking to, have a quick consultation with me, definitely click the link in the description area and we can have a 15-minute consultation to see how we, Done Right Bookkeeping, can assist you with your small business. So thank you so much. God bless. And I wish you much success in your business. Bye-bye.